Hey folks, Fahad FX here. So right now I'm gonna drop a gem like the most people are struggling to find the real thing about the market. So I'm not much good at English, but I'm trying. I will try to speak and I will make you understand. So I've already told that I'm gonna usually look on the PM session, like when we have AM session job, like on the Friday I've taken trade on pre-market, like I've taken trade on London, and also I take trade between 7 to 9. So on the London trade I've got TP, and on the pre-market trade it went for break even. Okay, so I've mentioned that on my channel I'm going to participate on the PM session. So how did I anticipate that price run before it happened? So I'm gonna tell you about that. Okay, on the daily time frame I'm expecting that the price should take this Tuesday's low. Okay, so on to the case, we have institutional level right here, that is $30,000. So I'm expecting this level. This is institutional reference level. So still on this case, the Friday has been given deep retracement. But still the price is respecting for bullish scenario. Okay, even though the dollar is going bullish, we can expect the stock index dollar is pushing higher. We created a breakaway gap, and we take a support in this weekend. Price is pushing higher, even though the prices should need to come lower prices, but we can expect like the bearish scenario is not broken here. If we go below this specific line, we are looking for bearish. If we support this line and go higher, we can still look for bullish. The bullish scenario is not invalidated, still it happens. Okay, once we break this line, we can look for bearish. Okay, that is the scenario right now in the for the next week. Okay, for now Friday I was expecting this Wednesday's lows has been to taken. So on that basis I have looked for sell setups on PM session. So I will frame it. Okay, on to the hourly, I was looking into this premium wick midpoint or the lower wick. So if you are bullish, if you are bearish, we want to see the price rejecting from this wick's lower quadrant or the midpoint. Should not touch this upper quadrant or the body comes to that. Okay, so as we can see here, the bodies are below this wick. Okay, the wicks are doing the damage, so this is permissible. Okay, so this was my London trade. I was shorting from here, and this was my PM session trade, pre-market trade. I went for short right again here. So on to the AM session, what did happen here? On the AM session, price has traded into this mean threshold, like daily OB's mean threshold, and price going higher prices. So all of them were expecting, okay, now we are going for bullish prices and we need to put longs or hold longs from here. So the thing that I want to say that yeah, so on the AM session, this was my pre-market trade. So on the AM session, price has traded taken the low this sell side liquidity and going for higher prices, and all of them were expecting the prices going for higher to take this Asia highs, PM session highs, and this buy side, like this is the original consolidation and this is a second leg distribution, and we are going for higher prices. Then what is the real scenario? Why did I trust this long? Okay, as you can see here, this is a real gem, and this is not you going to find anywhere else. Okay, sorry. On to the case, 50 minutes, the dollar is pushing higher. Okay, this is the real scenario when you need to trust the symmetrical market. Okay, this is how the symmetrical market works. So on this case, the New York after the 7, then the stock in the dollar is pushing higher. Okay, the dollar is pushing higher. On the same scenario, the MNQ also pushing higher. Okay, so what is the case? This is not a symmetrical market. So the market can go onto the the dollar is pushing higher, the index is pushing higher. It can happen, but it's not a great scenario. Okay, you need to avoid that scenario. That is a non-symmetrical market. The symmetrical market is when dollar is pushing higher, the stock should be pushing lower. Okay, so when the price come into a symmetrical direction. Okay, on this scenario, the dollar is pushing higher, the MNQ or the index is pushing lower. On this scenario, I was taking the trade, not this scenario, because this scenario is validating my symmetrical market. Okay, the dollar is pushing higher, the index is pushing higher, so that is not a symmetrical market, so I avoid this scenario. And also there is a reason for avoiding this scenario, because we have a Friday, we have no news, and it's better to take trades on overnight session or the PM pre-market session. Okay, we should not trade on the AM session. If we have a chance to trade on AM session, it happens like this, high resistance liquidity conditions. Okay, when did it translated into low resistance condition? Like if we have a AM session, if the AM session has a lot of high resistance condition, we can expect a low resistance move on the PM session. We can find the setups on the PM session. So I have already told that we can expect a lower side or expect a move on the PM session. I have mentioned that in my channel, and it happens right here. Okay, we can't trade without a drawn liquidity. Okay, if we have a doll, we can obviously take trades on the PM session. So in this case, I was looking for doll. Okay, let me go for into the 5 minutes. So I anticipated this move before it happens, and it happens on the here. So I need to find the liquidity. Okay, this is my liquidity, and I was looking also for this two Wednesday's low, and I was looking for this low. Okay, so yeah, so as you can see here, once we put this premium discount, sorry for my this, let me show click this. Wait a second. Okay, let me look for the premium. This is the premium level, this is the discount level. We are shorting from here, so we are looking for discount levels. So as we say that we only look for what? Inefficiency or liquidity. So as here, after we came into the discount level, where is the liquidity? This is the liquidity. Okay, where is the inefficiency? This wicks midpoint is an inefficiency. As you can see here, where does it stops? In the inefficiency. Okay, so I hope you got the real gem. Okay, as we go into the 1 hour, what you can see here, can you see any inefficiency right here? Can you see any fair value gaps open here? No. Yeah, so we can target this sell side liquidity. It's a low hanging fruit. Okay, you can definitely target this liquidity. So where is the next inefficiency? As you can see here, this week's midpoint is an inefficiency. Where is the price stops? This midpoint. Okay, I'm dropping a lot of gem. I hope you understand it. Okay, so if you're shorting right up here, where you can target? Okay, obviously I'm gonna target, if I'm shorting right here, obviously I'm gonna target like 1 second. I'm sorry. Yeah. Okay, if I'm looking for a short, like my stops will be come here, because what? I will frame this OB's mean threshold, and I will put my stops as a bit upper my OB's mean threshold. For why did I kept my stop loss with the meaning? Okay, that is I'm going to talk about right now. Okay, so as we can see here, this is a breakaway gap, and the price should not come into that breakaway gap. The reason why? Because I anticipate that level as a breakaway gap, and if the price come into that level, then my trading condition or what I believe in this right now is gonna be invalid. Okay, and also my OB's mean threshold is right up here. Okay, so once my price came up to that level, my trading, like this scenario is going to invalidate. So I'm going to put my stops right up here, and I'm going to target this low, and I'm going to take my partial, and I'm going to target this low, and I'm going to take my like or 90% of my trade, and I will look for loss. But in this scenario, this time, like this inefficiency has met the time on 410. So on this scenario, I will close my trade on right up here, because what? It's almost the time to close the market, like the time that the PM session macro, MOC macro has been, there is a time between like 3:45 to 4 or 4:10 or 4:15. So on this case, the time is met, so I need to close my trade. After that, the price could chop. Okay, so this was my intention to trade this market. So as you can see here, I've dropped a lot of gems. Like if we have a symmetrical market, non-symmetrical market, you should need to avoid the trade. As you can see what happens here. So before I anticipated this price run, because we have traded on the pre-market, we have traded on the overnight session, and we can expect a chop on what? Chop on AM session. And also we have, when we have a chop on AM session, we can look for PM session trade when we have a drawn liquidity. Okay, so I'm also dropped a gem, like where is the inefficiency? This week is in inefficiency where the price stops here. The price stops in the inefficiency where we target this liquidity to inefficiency. So the thing you need to understand that market will only go for liquidity and inefficiency, or the market consolidate. Okay, now on the hourly time frame also you can see that where does the market goes. I'm expecting that this week's midpoint should resist the price right up here, but the price has taken this highs and price came for an inefficiency to rebalance this area, and price has rejected from this premium week's midpoint and go for lows. Okay, so this was the scenario for the Friday, and this, I hope this understands you. Yeah.